All right, I am live. Let me know you got good sound and video, guys. Welcome to the channel. Glad you made it by for trading night school tonight. Thanks for liking it. Those are the two of you, and I see 9 of you in the chat. Awesome. I'm going to try to find you here on my phone so I can see the chat. We're going to be talking about this is trading night school. This is not Bitcoin technical analysis at all. I might do a little bit 5 minutes just to get you guys going while we're waiting on people to get in. But this is education on the Forex market and how to trade it. This is actually um, direct. I mean, this is just nuts and bolts how to trade the Forex market. It's information out. There we go. Information out here you're getting is I've learned over the last 3 years trading the Forex. And man, I've condensed it and given it back to you, the most valuable things for me. So glad you guys made it. I love the Forex market. Love it. I hate Bitcoin in a lot of ways. You got to babysit it. It moves erratically. It moves hard. The chart is horrible with the Forex. We scalp the Forex, get in, get out, and we got a nice strategy for that. And so we're going to talk about that. So anyway, all right. All right, gotcha. Got the chat rocking. There we go. Let me see, put this here. We got Star Wars coffee, and the Bitcoin chart is up. Oh, right there. We got an engulfing candle. Boom, right there. Give me 1 second, guys. My family's in the other room watching Jumanji. If you can hear it, sorry about that, but I don't think it shouldn't be too bad tonight. All right. What's up? What's up, Juman and Snehalala? Yes, that's fine. Thank you. I've been great. I've been great. I've been building a cabinet tonight and outside doing something for myself. So, yeah, had a good time. So, Mark, it is fun. Hey, Aaron and Denny, what's up? What is up? There was somebody else that was in the chat. Geek Boy, thank you for coming in first. And actually, Raul was here first. So, what's up, man? All right, all the hellos are here. Let's do a little Bitcoin analysis right before we get into our class tonight, just so we can wait for the stragglers to get in to class. All right, you should have already watched the other video. So we did get, so we got some kind of a three-wave move. We got a pullback. It looks like the beginnings of a three-wave up. So my first thought is this right here. Okay, if that's my first thought on what it should be on Bitcoin. 1-to-1 extension around 9100 to 9200. We're looking for pullback up to that range. That's if it's corrective. Okay, so if this goes up correctively, if it goes up impulsively, guys, it's going to get up to 9400 and it's going to continue. Okay, so corrective fibs are going to be anywhere from 8980 to 9250 in that ball. Anything short of the okay, and then if that's the case, then it's really a good setup right now, potentially to go long. We got an engulfing candle here on that's a 2-minute engulfer. Yeah, 5-minute engulfer right there. What I would do, we're going to talk about the setup tonight. Wait for a retest if you get it, the first pullback, and then you can go long and play that to the long side. Where's your stop? Where's your stop? Your stop's right here underneath that. If it comes down and comes lower, then That's not your trade. That's not the trade setup that you're trading. So if it comes down here, trade's broken. You can look for re-entry down here, maybe if it goes a little lower and gives you a reversing candle, or it's going to continue down to the downside. So again, every trade, you never know where it's going to go, right? You never know where any trade's going to go, but that's a setup right there. What you're seeing on the screen right now is a setup that happens regularly on in the market. Okay, you got you see this engulfing, these engulfing candles here. We had a reversal and then engulfing candles. Um, Once you had a pullback here, these are five. We didn't get much of a pullback here, but we did get the pullback here. So we didn't get it here. We waited for here, and this is where once you got this reversal, you could have gone long. Okay, now we got another pullback here, and this is another place you could go long, but again, you may get this. Okay, and then it might go long, or you might get continuation to the downside. Okay, so every trade, it's up or down, right? But this is where you can enter. If you think it's going long, you enter long, and your stop is so close. Your stop is so. That's the way we think as traders. Okay, that is the way we think as traders. We're looking for areas on the chart where the stop is close and the risk is low to our account. Okay, and if we stop it out, it ain't that big of a deal to our account. Yeah, Juleman, that's my promise to you guys. I try to keep you updated every day and all the time, and I try to be as active as I can in the groups. So yeah, a lot of guys aren't as active in their own trading groups, but you won't get that here. I'm committed to you guys. So, and I'm transitioning to do this full time. So thanks for that comment. Appreciate it. Hey, if you guys, with this, we can do super chats here if you guys want to. If you guys like the information and you like super chatting every now and then, I mean, don't small amounts. Uh, are welcome. Anyway, but we do have super chats if you want to show your appreciation. I generally never say that, but anyway. All right, we got 13 of you. We're going to be yeah. So on my Snia, I don't know how to say your name. So when you go to my YouTube channel, I'll go to my channel here. Well, actually, if you just look in the description of this video, you'll see a link. You'll see information about joining the trading group. Um, so, uh, um, man, why does this guy have ads on his videos? Golly, just kidding. Okay, right here for daily trading support, trading ideas, trading education, access my personal trades, and yeah, we have a Forex group as well. And the Forex group is growing. I give information and videos. I'm trying to teach everybody how to do the Forex. So anyway, yeah, the Forex part of the group is growing. So anyway, it'll be getting bigger and bigger as we move on. Because I'm adding Forex to this channel, and this trading night school is one way to bring you guys into that market and then grow that part of this channel. So anyway, yeah, that's what we're doing. Okay. Hey, thanks, Mark, and I really appreciate that as well. Okay. So yeah, we do have a Forex group. You're welcome to just click on Patreon, and we have a trading group. My wife just stole my popcorn. Y'all believe that? She made me popcorn and then she just took it back. She says for our son. Okay. I was just kidding around, Samuel. I'm just joking around. I'm just having some fun. I don't want it. I can't eat while I'm live. All right, I'm gonna eat popcorn while I'm live streaming. You hear it right in the microphone. Okay, okay. You ready to get started, guys? And I have an Oreo, but I'll not eat that in front of you guys. I'll go off camera to do that. All right, ready? Let's get started. We got 13 of you here, ready to learn the Forex. Um, this was public, right? This is a public live stream, right? Uh, it's not private, is it? Um, Yeah, public. Okay, good, good, good. Yeah, just making sure it's public. Okay, there we go. All right, let's get started. Anyway, Bitcoin. So let's see. Finish the TA. I'm all over the place here. So yeah. So Elliott wave, patterns. This could be one A, B, C, like that. D, E. I mean, 1, 2, 3, 4, 5, like that. Um, so we could come up here, or this might be a leading diagonal right here. Okay, 1, 2, 3, 4, 5. Okay, to the downside, getting a three-way pullback, and then we're coming down more. So hard to tell, guys. Hard to tell. Pick a direction and trade it. Just make sure you enter at the right location. Okay. All right. So anyway, yeah. See how we're getting this pullback on this candle? Chances are, if I come back and look at this later, it's going to be coming up that way. Doesn't always do it, but it does. See right here, we had an engulfer. Okay, it came back and then it had another leg up, and then it came back down. But those engulfers signal a reversal of some kind. Okay, and we're getting the follow through to the upside. Now, how deep that'll be and how big that'll be, we don't know. We don't know. Yeah, maybe so. Not many people are interested in learning to trade. They just want to know where price is going, so they watch the videos for that. But you guys are here because you're learning to trade. So, all right, let's stop all the chit chat and we'll get into the nuts and bolts of what we're talking about tonight. Okay, so tonight's live stream, we want to continue to remind you about session timing. And then I want to talk to you about liquidity grabs and where the liquidity is on the chart, knowing that. And then once you understand liquidity grabs, and I want to just teach you a couple of just real basic price action trading tips that you can actually take home today and actually start applying. And I just shared one right a minute, but I'll share a couple of my very key, most used price action trading tips. Okay, so we'll talk about that as well. All right, so here we go. Oh, so last week, let's review what we talked about last week. We talked about session timing. Okay, so I'm going to go to the 1 hour chart, and I want to remind you about session timing. Okay, let's remind you about the different sessions there are and the times that they're on. Okay, so session times. You can screenshot this, or you can copy this, write this down on a notebook page. Asian session, it's happening right now. Asia is up and ready to go. Any of you living in Asia, you're up and rolling, aren't you? It starts out. I'm going to give you all this time in Central Time. Okay, so this is U.S. time Central. Okay, because that's the time I'm used to. So roughly around 5:30 my time, 5:30 p.m. is Asian time. You might even say 4:30 because you can add Australia with Asia. Australia wakes up before Asia does, so Australia is getting rolling around 4:30, and Asia is going to roll into about 2 a.m. something like that. Roughly. Let's see. Then you have London session, the London time. This is when London banks are open. 2 a.m. my time. This is again Central Standard Time, so you'll have to calculate the time difference here. I'm in Missouri, same time zone as Chicago. So my time zone is Chicago's time zone. So you do the calculations there. If you want. So 2 a.m. I don't know. Add 8 hours to that, roughly. My time. So that's going to be what? It's 10. Or maybe 11 hours. So 11. So 2 a.m. to roughly, let's just say 12 p.m. Okay, right there. That's going to be London hours. Okay, and then you're going to have New York hours. The New York session. My time is going to open at 7:30 a.m. and it's going to go till about 4 p.m. Okay, so those are the session times. Okay, so the Asian session is the consolidation session. Okay, it's basically when everything is just kind of going sideways, staying within a range. It's not moving much out of about a 10 to 20 pip range. Okay, generally speaking, it starts to expand towards the end of session. It'll start expanding, so price will kind of consolidate. Okay, then it'll start expanding its range outside, and then you're going to have the move that happens. that happens at the beginning of London, 2 a.m. or 1 a.m. in that ballpark. It could happen an hour, but we want to be trading around these session times. Asian session, I don't do a lot of trading in Asian because everything's going sideways. It's good for scalping if you know how to scalp, but it's slow. So I wouldn't recommend it, but it's the kind of thing, if you see a setup, you can get in and just leave it. It's going to go slow and nothing's going to run away with you generally in Asian. The pairs I trade in Asian session, just to remind you about that. Let's see, the pairs for Asian session. Here, I'll just draw it here. I trade I trade the Australian pairs, AU, which is Aussie US dollar, or AJ. Those are my favorite two to trade in Asian session. NU isn't bad. That's the New Zealand dollar. Okay. Or AN. Okay, that's the Aussie New Zealand dollar. Okay, so those are four pairs you can trade. You might even add UJ to it, which is U.S. dollar against the Japanese yen. Okay, Aussie is against the Japanese yen there. So those are the ones you want to be trading in Asian session. Okay, why? Because Australia's up and the banks are moving, and the Asia is moving. So that these pairs are going to be the ones that will have a tendency to be moving during Asian. So if you're going to trade, try to stick to those pairs during Asia. Okay. All right. Now, generally speaking, everything else moves during London. Okay. So my favorite pairs to trade are EU. Okay. The euro against the U.S. dollar. I like AU, and that moves during London and New York. I like NU as well. That's a slower mover, but I like it. I like it a lot. I like that pair quite a bit. Okay. These are the main ones I've been trading lately. I trade EU a lot because I scalp a lot, and it has the most volatile moves. It's the one with the least amount of it's the pair with the least amount of spread. Okay, and it's the one most manipulated because most traders trade it, which is fine because again, my strategy is more of a scalping strategy. I do sometimes hold trades longer, but it's more of a scalping strategy for now. Okay, let's see. So I like AU, EU. Let's see. UCAD, when there's CAD news, I like UCAD a lot. Okay, so we'll talk about news in just a minute. So anyway, those are the pairs that I'll trade. But London, you want to be trading around about the first 2 hours of a session. You want to be up about an hour before a session starts. Okay, so if London starts 2 a.m., you want to be up about 1 a.m. looking at the charts, looking for setups, looking for the moves to begin, and to be setting up. And you want to trade into about 2 hours into that session, and then you about the last 2 hours of a session. Except that I find that the 12 p.m. time for 12 p.m. is a key time for the New York. It's what I call the afternoon consolidation move, and I'll show you what that is in just a minute. It's a trade you can look for every day. You don't always get it. We got it today. We just got it at 2 a.m. 2 p.m. But we got it today. Is everybody doing okay with this? This stuff, y'all listening? Am I rambling by myself? You guys doing all right? Let me know. I'm going to take a drink here. Any questions so far? Just reviewing session times with you, and just the pairs that I like to trade in general, and the importance of trading at the beginning and ending of sessions or critical times. We're going to add to that information tonight. Just pause for any question. Everybody's doing good? Mark's doing well. All right, excellent. All right. All right. Let's good. I got two people. I just want to make sure two people confirmed we're okay. Let me know if you have any questions along the way. Just try to keep them about the Forex here, okay? All right. Let's just review the timings, okay? So when did this move today happen in EU? This is the EU chart. This is the euro against the US dollar. When did this move happen, right? Well, if you'll notice my timestamp right here, I'm on the 1 hour chart, okay? So the move to the downside right here happened in the first hour. Okay, this little setup kind of sideways. So at 8 o'clock down, and at 9 o'clock it went up. Okay, actually it started going up at the end of the session. Okay, it popped back a little bit and then continued on. So First couple of hours of the New York session, guys. This is when this move happened. Okay, and then what have we been doing since then? We've just been doing sideways consolidation, and that's what Asian market. That's what the Asian session does. You can take it, buddy. Okay, let me show you something on the 15-minute chart here that you'll find pretty interesting. At what time did this reversal happen? Well, I think it happened at 10 o'clock. It came down, and it kind of came down, and then this happened right here. This little consolidation move right here. That's happened at 11:30. So the up move began on the 12 o'clock candle. Okay, or right around the 12 o'clock candle, and that's a key. That's a key time, and so this is actually a good time to catch a reversal trade around 11:30 to 12 o'clock. There's often a reversal trade for 15, 20, 30. Today it was like 30, 30. You could have had about 38 pips. So watch on EU at noon after the move has taken place. Watch for a particular consolidation, because basically they move it very quickly and then they just consolidate it around 11:30 or 12 o'clock, sometimes 1. Okay, and you'll notice right here this was at 2 o'clock and it started going down, and I actually traded this to the downside. Took me a couple of entries to catch it, but I caught it to the downside, and we're going to talk about this liquidity grab that just happened here in a little bit. But I just want you to notice, go back and just look at the chart and watch what happens around session times, okay, when they start. Okay, so let's look back here a little bit. So right here, this candle right here had an up move really fast. This was 2 candles prior to the London session. So boom, London, right before London started, we had a how many pips was that move right there? That move right there was a 30 pip move right there. 30 minutes prior, 1:30 prior to London, and actually look what happened over. So London, they just kind of you see how the during the Asian, this was Asia right here. So from we had a final move. No, right here we had a move, and then we just consolidated right here. That was Asia right here. All that's Asia. Pretty much we had one quick move, enticed traders in, so people went short, and then they just started slowly taking it up, and then back. They kept it in that range, so traders are staying in their positions, and then what do? They break out to the upside, freak traders out. So anybody went short right here, that got in right here and went short, they're freaking out here. Why are they freaking out? Because it's shooting up. Okay, their stops are getting hit because their stops are right here. Okay, in fact, let's just talk about this. Let's just talk about liquidity grabs. So that's the first. That's the topic. We've done some review on timing. I want to just the liquidity really has to do with timing. So let's just talk about it and understand it. Okay. And let's just talk about liquidity. When we talk about liquidity, or we talk about liquid moving, okay? So when we talk about liquidity in a market, we're talking about money moving quickly, okay? In the Asian session, money's not moving very quickly, okay? Because only Asia, that part of the world, is up. Once London joins in, you got Asia and London, you got 2/3 of the world up, rocking and moving, and then you got really, American traders also in there as well, trading late. But that being said, the world's really moving during London and Asia, and then New York, man, everything's popping. All of them are popping. Asia's shutting down for a little bit, but people are still trading. So there's a lot of liquidity, and the most liquidity happening during New York session, London and New York. But anyway, so money's moving, okay? And so when we talk about a liquidity zone on the chart, this is a place where market makers will go to get liquidity. Okay, now you have to remember something about market makers. Okay, what is a market maker? Okay, let's talk about that just for a minute. um, Guys, this is really important what I'm teaching you guys. I don't have any slides, I'm sorry. This is just me talking and you guys listening on a chart. A market maker is a bank, a hedge fund, a large entity with a lot of money that basically has to buy into to this market with to buy licenses and things like that. They give them they basically promise to provide liquidity. when you want to sell or to buy, you can do it instantly. How can you do it? Because you got a market maker who has agreed to buy or to take the opposite side of your trade, whether it's good or bad for them. In other words, if you're selling and the price is going down, that's good for you. That's bad for anybody buying on the other side. Okay, so for anybody buying your sell, okay, that's bad for them. If price is going down, that's good for you. A market maker buys or sells um, uh, instantly, giving the market liquidity, instant transactions happening immediately, and they take buys and they take sells all the time. Now, what happens is their books get heavy. Their books get heavy to sells or buys, and they have to keep their books balanced. Okay, in order to do that, they have to take the market where the liquidity is. They have to do they have to go grab that liquidity, grab those positions, and then begin moving the market. And there's not just one market maker. There are all the many different market makers. They're all banks. Okay, they're all pretty much banks and large hedge funds. Okay, the central banks, and then basically are what we're dealing with, and and large bank entities, and they all move together. They know what. I don't know how they signal. I don't know how it all works, but they know they're working together against us, and we're trying to trade with them. Okay, and so, for instance, right here, let's just talk about your psychology and what you would have been feeling, right? So, price is going sideways, 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 sideways. What are you waiting for when the market consolidates? Let me just ask you a question. When the market consolidates and goes sideways, what are you waiting for? Who can tell me that? I want to see if you're listening. What is a trader waiting for during a consolidation session? See who my good students are. I'm gonna eat a Oreo while I'm waiting. Sneeze says a pump, a move, a breakout. There you go. And breakout is what we call it. We're waiting for price to break out of this range. So price is ranging. We're waiting for price to start moving because listen, we can't make money as traders. When, sorry, let me try that again. Yeah, we're waiting for a breakout. We're waiting for price to break out of this range. So price is moving within this range, and you can't make any money because it's just kind of staying sideways. That's what Bitcoin was doing. That's what made Bitcoin so hard. When it was moving sideways for so many days, it was just kind of staying in that range and didn't give me any kind of positive feelings on getting into that trade. And so traders are waiting for that a breakout of that range. Okay, and market makers know that. Okay, that's one of the reasons they consolidate. The other reason is they're collecting orders. They're collecting. So there are. Let's see let's just talk about the psychology here. Okay, so come on. There was a move down here. Okay, and then price started pumping. Had a bit of a pullback and then another pump. Okay, so what are traders thinking right now? Oh, okay, the direction is potentially up, right? We got to up. Okay, and then we get this pullback, but then we get a reversal. Okay, we got a continuation to the upside. Okay, so in other words, price had a move, we had a pullback, and now we got another volatile move. Okay, and look where it came. It came right here to the top of this. Okay, now anybody that was shorting this right here and they're still in the short, where are their stops? Their stops are right up here. There's you know that's where you would put yours. Are you going to put it up here? Way up here? You might, but that's really high. That's a long way away. All the traders' stops are right in here. Okay, they're right above here. There's a cloud of orders. Just picture. Okay, this is a liquidity zone. That's a liquidity zone. This is where traders have money ready to be grabbed. How so? Well, if you're shorting, what kind of order do you have up here? What kind of order? If you've sold How do you protect a selling position? That's a question. That's a question for you guys. Yep. You do a stop loss, SNE, and but Geek Boy, you got it. You protect a selling position by with a buy order. Okay. If you have sold to 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 close a selling position, you have to buy it back to give that back to the person you borrowed it from, because that's really what you're doing when you short. Okay. So in other words, when you have entered into a short position, when you have sold, okay, the way you close that position is you buy it back, okay, and then you give back, what you borrowed, and then you keep what's left over. If what you borrowed is more expensive than when you sold it, then you owe some money. You got to pay that person the current value. But if it's less expensive than when you sold it, then you can buy it back cheaper, and you get to keep the change. That's what shorting is. Okay, so there's a bunch of buy orders in right here. A bunch of buy orders. That means they're going to buy. Okay. Okay. There's buying there. Now let me see if I can get this off the chart here. So look what the makers do now. Had a move to the up. Okay, had a down move. Well, first of all, the trend is up right here. You can see that. Oh, sorry. Should have said that first. Trend is going up. Now, let me go to the 30-minute. Okay, had a move to the downside. Now we're going up. We got a correction. We got another strong move, but it comes right here to this zone right here, but it doesn't break it. Now, let's talk about this consolidation zone. So now we go sideways. Guess what time this is? Guess what time of day this is? Who knows what time of day this zone sideways right here is? Who knows what time of day that is? Who could guess? What session is when price is going just like that? Hardly moving at all. What session? If you just joined us, we are in the middle of learning the Forex and trying to understand the market and liquidity zones right now, and how the market moves and why it moves like it does. That's Asia, baby. That is Asia. Tommy, are you in Asia? Is that where you live? So yeah, we got Asian. This is Asian session. Okay, it's 2 o'clock. This is the end of New York, so it's the end of the day consolidation. It's staying sideways. Now, what happened? What happens here at? Let's see. This is April 29th at 6:45. Let me show you something here on the forexfactory.com. You need to have a link to the forexfactory.com on your chart so you can look at the calendar. Okay, on the calendar and the forexfactory.com. April 29th, look here. Let's see. Let me make sure my time, my time is synchronized. We're good. We had 8 p.m. news here, guys. We had 8 p.m. news. We also had 1:30 news on April 29th. So there was news happening at 8 p.m. and 1:30 p.m. Let's see here. Let me go back to the chart. There we go. Okay, so yeah. So we had this volatile move to the downside, and you can see this right, and it's a breakout. So what do you think happened? There are going to be some traders that are going to see that and say, "Oh, I got to go short," and so they enter their position short right here. Okay, and what happens is This is Asian session, okay? And their job in Asian session, the bank's job in Asian session is to keep everything in a range, okay? So here's let me show you what we call the Asian range. This is the Asian range right there. This range right there. And every night the Asian range will be different, so you just got to pay attention to the Asian range, okay? But basically, we got people entering shorts right in here. Once we had a breakout, okay, and they're making pips, okay, they're making some money. But then the market reverses on them, okay, and it comes back. Now look where it comes back to. So if you're a breakout trader, okay, if you're a breakout trader, let's just say you draw a line right here, and this broke out, okay, and you enter short right in here, okay. Price went down. How far did price go down? Price went down, hey, 22 pips. That's not too bad. Price went down about 22 pips. Okay. If you're trading a standard, that's 220 bucks. Okay. Now, what happened right after that? Pretty quickly, in a matter of just about an hour and a half, what did price do? Price came back up. Where did it come back to? Well, if I draw a line right here, I want to show you here. I'm just going to see the bottom of this range right here. Let me show you. Boom. It came back to structure. See that? Price came right back, right to the breakout. So what's this guy's position now? Somebody who went short right here, what's their position now? Well, I mean, they're doing okay, but it's like break even, maybe a little bit of the negative, so they're not too scared. Okay? And then what happens to price? Price starts going back down again. Okay, and he's feeling pretty good about it. Price is going down, things are going great. Price is going down, his trade is still doing great, right? And that's happening during Asian session, pretty good. Now, what happens once London, you start to get another move here? Look at the top of this wick right here. Where is it? It's just, so he's in profit here. That trader is in profit, but not much profit if he's holding this thing waiting for a down move, okay? So if he's holding this thing, waiting for a downward move, he's not. When price gets back here, he's not much in profit, but he's not ready to close the trade. Now what happens? London opens. Boom. Really fast. One candle. Everything's been going sideways, going to sleep on you. London session opens. Boom. We got to move to the upside. He's freaking out. Why is he freaking out? Because now price has moved beyond his open, 20 pips. He's now 20. If he didn't have a stop loss, he's 20 pip in the negative. But this guy does have a stop loss because he knows that it's foolish to trade without a stop loss. So what does he do? Well, he put his stop right above this last high, right here. So the last high, he's like, listen, if price comes up here and breaks that high, I got to get out of this trade. So his stop is right up here. So guess what happens? During London session, the first move out of the gate, boom. Why did they go up? Why did they go up? And why did they surpass this level? And who's they? The market makers did this. We don't move the market okay? So look at that. Why did they go up and wick into this region? Why did they go up there? For two reasons. Number one, they got the stops. Anybody that had stops up in here, it was a stop hunt. They went and got them. Okay? Secondly, why else did they go up there? Because you got other breakout traders. Oh, look at that. It's going up. Boom, volatile. So what did that guy do? So breakout trader says, oh, look, he had this line drawn in his chart, and this broke out, retesting it, and then it broke. Okay, he gets in the trade. So here's his position right there, maybe, right when it breaks out. Okay? What happens? Price is going up, oh, he's feeling really good about that trade. I mean, he's feeling amazing about that trade. Okay? That trade is going great. It's flying up. It's feeling really, really good. And then what happens? Boom, it comes down. But notice where it comes down to. I want you to pay attention here. See the top of this wick here? Where did this candle come back down to? Came back down to what we call structure. Why did it do that? Because this is all about psychology, okay? This is all about psychology. The market maker is bringing the price back because he's okay. See, in order for him to take price up, he had to buy, right? Well, now he's selling, 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 right? Okay. Now, so anyway, so he's selling back down. So now this guy's getting scared. Okay, he's okay for now. Okay, it starts going up. He's feeling pretty good. But look what happens. It comes down here. Now, why does this thing come down here? Okay, because this is beyond this guy's trade. It's all about making him feel, making confusing traders because the direction isn't clear. Okay, we got big candles to the upside, big candles to the downside. Direction's not clear. Okay, that's number one, and that means there are people taking, there are traders taking buy positions, there are traders taking sell positions. Okay, now we have to figure out which way the market makers are moving. Okay, but that being said, this is all happening during London, and traders are taking positions because, and listen, this is happening all through London, even into 5, 6 o'clock. That's what's going on. It was just chop last night. Is all it was. Okay. So anyway, so yeah, we come back down. We're going to scare these guys out of their trade, but it's just a little bit negative for them, so they're holding on. Where's this guy's? This guy's in right here for long. Where's his stop loss? Right under here, right? That's where his stop is. So look what they do. They bring it down really fast. Why did they come down here? Because anybody going long here and here, their stops are all down here. Look, see this right here? Just below, look where it came. This came right down here. Collected. Now, these guys are buying, okay? They're buying. So think about it. If they're buying their long positions, that means their stop is a sell position. So why does the market maker need a seller? Because he wants to buy so price can go up. So he needs willing sellers. So how does he get willing people to sell? Well, look at this. I mean, because I sold this morning, I sold that, but I trade for 30 pips. Okay, I trade for 20 or 30 pips, and we're going to talk about that in just a minute. I'm going to tell you why I do it that way. Okay, but anyway, yeah, I traded this to the downside, and I got 35 pips out of that. Okay, now, so, but anyway, so I sold this. Okay, it broke a trend line to the downside. It came down. Okay, why does he come down here? Because he wants people selling. So there's sellers, sellers, sellers. Okay, uh, they got buying stop losses up here. They got buying, and that's gonna. So once price gets up here, that's gonna propel price even higher. Okay, so there's all kinds of stuff going on here. There's all kinds of liquidity happening in this zone. So you got to understand all of that, and that's what's going on here. Okay, so when we talk about liquidity zones, okay, there's a liquidity zone. Okay, here's a little liquidity zone. Here's a big liquidity zone down here. A big liquidity zone down here, because anybody that went long here, their stops right here. Okay, all right. So liquidity zones are at key places. Now this is a small time frame. Okay, let me clear the chart here. Oh no. Let me reload the chart. Sorry. Sorry, guys. My computer didn't like what I did. Okay. All right. So, let me check something here real fast, guys. Everybody doing okay with this information? Okay. Okay, so all that happened today. But if we go out, zoom out to the 4-hour time frame, which is where we do our large analysis. Now let's look. Let's look at where the real liquidity is. Okay, let's just kind of see what happened here. What's happening on the chart here? Okay, prices. If we go to the daily, I mean, look at this big trend. Okay, where's the trend going? It's down. Okay, trend is down. That's the daily. Okay, let's go to the 4-hour. Okay, now we had a big reversal off the bottom right here, right? Yes, Peter, it is. It's all part of the group. Okay. Okay. So anyway, so price is going down. Had a huge reversal. I mean, look how many pips this was. It was 668 pips, almost straight up on the 4-hour chart. I mean, just huge, massive. If you caught that, buddy, you made some money. Okay. You were able to hold into that on the 4-hour chart, 700 pips, amazing trade there. But then look what happened when the COVID hit. When COVID hit, boom, it came down. But really, it's in the charts, okay? It's in the charts. So let's look at it for a second. Why did price come down here? Well, anybody that traded here or got in, where's their stop? Whoa, buddy. You know, this is what we call a liquidity zone. Now, most guys aren't putting their stops way down here, okay? It's too many pips away, okay? They're keeping their stop just below the last low. That's where their stop is. So what happens? They go up here, okay? Their market makers come back down. They're squaring up their books. They're getting rid of all their their baggage, that they had to on the way up. They had to buy up here, right? So they got to sell them. They got to sell off and take the profit, okay? Now, why do they come down here? Because they need willing sellers. Okay? Because a buyer's stop is a sell. These are all sell orders down here. Why do they need willing sellers? Because they want to buy. Okay? That's what's going on. This is liquidity. There are plenty of buyers sellers down here for them to buy into. So they want to buy these guys' sells right down here. So they're coming down to this liquidity zone, and they want to get that liquidity. Now let's look at the next one. Okay. Now here we had a pullback, but it didn't come all the way down, so the no liquidity grab there. Okay. Here price is up here. Now price came up and then it came back down. But notice, why did it come down? See the bottom right here? See that bottom right there? Why did this come down and just barely break that level? Why? Because the market makers are going for the liquidity. They went and they got the stops. All of these are buy orders. No, they're sell orders. They're all sells. They want to buy price back up. Okay? Where do you think price is going to go now? Where do you think price is moving? Well, we're going up. We're going up. If we draw a trend line, people do trend lines. We've broken the trend line. Okay, where do you think we're going? Well, we're going up. Where's our first stop? This liquidity zone right here. Where do you think the second stop might be? Right up here, this liquidity zone. Probably going up for a little bit. Going to go up and snatch the liquidity up here and then take it down. Shoot, they might come up and snatch this liquidity. Okay, and that would be a move like that. This could be a one wave, and this could be from Elliott wave. That could be a two wave, and then we're going up big time. This might be the beginning of it. Don't know. But I'm just showing you on the chart liquidity zones. Every time frame's got them. Okay, every time frame. I trade off of for my pips or whatever. 15-minute chart is fine for me. Sometimes even the 5-minute chart. And the 1-minute chart sometimes as well. So anyway, yeah. So that's what we're doing here. Where's the liquidity zone right now? Well, where we got a liquidity zone here, where there's plenty of sells and there are plenty of buys up here. Okay. Anybody short from up here? They got a buy stop up here. Anybody long from down here? Their sell stop is down here. Okay. Doing okay? Now, knowing that information is critical for you to trade this market because it lets you know where price is potentially going and what price might do around those zones. Oh, Peter, is the Forex discard free? No, it's part of the Patreon group. Sorry, man. I misunderstood your question, but yeah, it's part of the Patreons. It's a monthly subscription. It's cheap. It's good value. It's good value. One good trade a month will pay for that. I mean, not even that. I mean, a cheap trade. It could go up. It could go up and liquidate or find the liquidity up here. They might go up, but they don't always go right up. I mean, they keep you guessing, but you just need to know where the liquidity is and what they might do. Okay. All right. Now, let me explain to you how to trade in this environment, how I trade in this environment. What you'll notice is that with like EU, for instance, you know, sometimes it'll have big moves like today, and that was 130 pips today that it moved, or something like that. It was a lot of pips that it moved. 130 pips, 100, something like that. So it moved a bunch today. And so sometimes EU will do that, but then it just goes sideways. It does this choppy stuff, on the 15-minute chart. It just looks real, real choppy, right? So how do you trade within that environment? Well, you learn. I trade the 5-minute chart a lot of times on EU. I have learned that within this choppy environment, that price will go 15 to 30 pips most times before it changes directions. Okay. Now here's a big one right here. Here's a 70 pip move. Okay, before it changes directions. Okay. Let's just kind of measure the moves for a little bit. We had a move here. Okay, there's a 50 pip move before it changed directions. Okay, let's just measure this little move right here. This move right here, about 30 pips. That move right there before it changed directions. How big was this move? That was a 27 pip move. Okay, this move right here, 39 pips. Okay, so the smaller moves, even the fake out moves, are generally going to be anywhere from 10 to 30 pips. The fake out moves will be. Most often they're in the 20 to 30 pip range. Okay, so because of that, because I noticed that, and I basically said, okay, this is basically 20 to 30 pips. Even if it's a fake out move, you can catch, 10 to 30 pips, right? Well, just think that through for a minute. If you just learn to take your profit, okay, take your profit at that 10, 20 to 30, 10, 20, 30 pips, okay, 15, 20, 30 pips. You could be a breakout trader if you want to. You could play this move right here. It's just a simple price action move. It's so simple. Okay. Asian markets going, you draw a trend line. Okay. Draw a trend line right here. Okay. Let's just say we got this trend line working. We're on the 5-minute chart. Price broke it. Okay. Now here's the way I've got a couple of rules for myself to keep me out of trouble. Okay. We'll talk about it. You'll notice that this trend line here, what did the market makers do? They broke it. They broke it and then they went up back into that. Why did they do that? Because they want to scare you out of your trade. Okay, they want you to buy back. If you sold here, they want you to buy it back. Okay, so that they can sell into you. And they're not just you. It's they want all traders. How many traders are acting at the same time? Okay, so anyway, basically what you want to see is a breakout a retest, and then another candle that's showing reversal off of that. Okay, and you want to see that candle close. Okay, that's the key. Okay, so let's just say it reacts and it breaks through here, and you get in the trade right here. Okay, that's kind of a breakout trade. Okay, you would have caught about 20 pips. Okay, if you were disciplined enough, once you got this candle right, let me show you. Once you get this reversal candle right here, take your profit, even if it's a little less than 20 pips. Take your profit and call it good, and you have made a little 15, 20 pip trade. And then look for your next one. Look for your next trade. I mean, shoot, you gotta move up like this. Wait for the breakout. You got the breakout. You didn't get a little retest, but the first pullback, you can get in that trade. Again, you don't know what it's gonna give you. This one only gave 12 pips if that's where you got in. Okay, so anywhere from 10 to 20 pips. Okay, now that's a simple breakout strategy, and it's what I kind of used today for today's trade, this afternoon's trade. Let me show it to you. Okay, so I saw this thing going up like this. Okay, and I drew this line first. Actually, I drew that line first. It broke out, retested, and continued up. Adjusted the line appropriately. Okay, once I got this breakout and a retest right here, this was the entry right here. Okay, and let's see, somewhere in this vicinity, we got about 20 pips. Okay, once we got this candle right there, that candle right there. Okay, it's an engulfing candle. It's clear as day. Okay, that's not engulfing right there. That's not engulfing. Okay, this was an engulfing, but we didn't get the retest back. Okay, um, once I got this engulf and then that retest and then a continuation, boom, you're out of the trade. 15 pips, something like that. It's just a simple end of the day scalp trade that you can get. You can get 10 to 30 pips. Now, it could have given me more. It might give more. But the point is, okay, the point is that this is just a simple trend line breakout trade, and again, they're going to give you anywhere from 10 to 20 to 30 pips, and you can do that all day long. Okay, you can do that all day long. Just a simple price action trade. Okay, but you got to be disciplined to take 10. You got to be satisfied with 10, 15, 20 pips. That's it. Maybe 30 if it gives it to you. It may not give it to you. You may get it. You may not. Sometimes you'll hit the jackpot and hit a 60 pip trade, or a big trade. So that's one simple trade that you can make. That is a pretty good little trade to take. Okay. You can draw trend line breakouts all over the place. Let me show you a larger place, on the larger time frame. Okay, larger time frame. You got this trend line right here. As soon as you got this breakout right there, as soon as you broke this level, notice there's a little bit of a pullback right there. Broke out, retested, boom, you're in the trade. You would have gotten, if you did that, you would have gotten 70 pips today because it just went straight up and it gave it to you immediately. Okay, but if you were smart, you could have tried it. Your stop is just right under that line. It's real simple. Okay, I mean the stop is so close, it doesn't matter. Okay, so you can see, like, even for right here, see this breakout trade right here, just a simple price action breakout. Okay, right here broke out. They gave you 28 pips. 28 pips. Once you got these candles that show reversal, get out, take your pips and run. You got to be disciplined. You got to watch you can't be greedy. You just take your pips and you run. Okay? And it doesn't matter whether the trend is going down or up. It'll give you anywhere from 10 to 30 pips. Oh, you go, Mark. There you go. Okay. So that's a simple price action trade that you can do within this volatile market that'll give you 10 to 20 pips. Let me show you my trading plan on a $300 account. I just want to show it to you. Okay. Okay. So here's a $300 account starting balance. Just to say you got $300 to trade on the Forex. Okay. Now, a percentage of account variable. That means what that is just simply is here you go. It is percentage of your account balance you want to trade daily. Okay. So enter as a decimal. Okay. So 60. 60%. That means you got 40% to hold negative balance or stop hunts or things like that. Okay. You got and then you could say I want to shoot for 20 pips a day, okay, or 20 pips per trade. You can change that to 15. So let's just change it to 15 and see what you can do with 40 trades at 15 pips every trade. What this does is it tells you how much you should expect to make during and what lot size you need to buy. And I just created this and did the calculations based upon EU. This is based on EU and a 50 to 1 leverage, okay? All right, which is what my broker does across the board, pretty much 50 to 1. You don't get to choose leverage for Forex.com. It just is. All right, so lot size is not quite a micro. It's 0.09. Actually, yeah, it's a zero point 0.1. That is 10. Yeah, it's not quite a mini. I mean, it's not quite a mini. Almost is 9/10 of a mini. Okay, and you should basically at 15 pips you should take profit when you reach $13 or thereabouts. Okay, and then what that does is that adds the $13 to that balance. Now your balance is 1330. So now your lot size is going to be 60% of your new balance. Okay, and you'll notice that at the first two trades are 0.09. Okay, so that's 9,000. You type in 9,000 in the trading view. Okay, but the second trade you're making 1389. Okay, now the third trade you're actually trading a mini, excuse me, you're trading a mini lot. Okay, and you're going to make $14 and you just need to take your 15 pips and you run. And after 5 trades, now you can do that in a day or in a week, you can do one trade a day, whatever. But let's just say you did one trade a day, 15 pips, and you were disciplined to take your 15 pips and you got 5 winning trades for 15 pips, okay? At the end of the week, you're going to have $372. Okay? Now, next week, you start again and you're in, and at the end of the second week, you're going to have $462. But notice the lot sizes are increasing, and as long as you're disciplined. So, after 20 trades, and that's 1 month of trading, if you're only doing one trade a day, 15 pips, after 1 month, you're going to have an account of $714. You're going to, after a month of disciplined trading, just with a $300 account, you're going to more than double your account size. Now, after 2 months, if you've disciplined yourself, 2 months of trading, disciplining yourself, you're up to almost a half a lot, okay? Making $70 a trade, and you're up to $1,700, okay? And that's after 40 successful, disciplined 15 pip trades every time. Boom. Okay. Now, if you want to go for 20 pips per trade, you can put 20 pips in in this, and so doing 20 pips after 2 months or 40 successful trades, you're gonna have $3,000. You're gonna turn $300 into $3,000. This is assuming a lot, guys. You've got to be disciplined. You've got to know how to trade. You've got to You got to have proper risk management, and all these things. And you might this doesn't account for losing, so you may lose some trades. So what I do when I do this, when I put my starting balance in, I just put the X on when I reach that level, and like that, and that just kind of tells me where I am. And what I should be trading, what my account size is, and whatnot, based upon when I start. Okay, now, so anyway, 20 pips a day, starting with $300, you can have $3,000 in 40 successful trades. Now, again, that's ideal, and you have to know what you're doing, and you have to be disciplined, but you can do that. So anyway, my point in showing you this is that you can make money on the foreign exchange if you're disciplined. Okay, you can't be greedy, and that's what I'm actually working on right now. I'm doing a little exercise with myself right now, and working on that very same thing, being disciplined to take my profit at 15 to 20 pips, and I'm trying to manage my psychology so I don't say, oh, it's going to get more, and then you hold on to a trade longer than you should. Okay, so we don't want to hold on to a trade longer than we should. We want to take our profit, even if it goes on it goes on. We miss it. It's okay. Why? Because we're just going to. I mean, we might miss this big move, but here's what we're going to get. We're going to get a consistent trade every day. This kind of trade right here only comes once a week, maybe, or less. Even you don't always get a trade like that. Once every 2 weeks you get a big trade like that. But most of the time, what are you getting? You're getting this WXY, this choppy crap, and you got to trade within that environment. If you're trading within that environment, you can do it. Okay, and so there are other strategies, but I'm just sharing one strategy that will let you trade for 15 to 20 pips within this environment, this choppy environment, and you can actually make money on the forex. Now imagine, let's see. So imagine having a $20,000 account. Okay, okay. Let's just say getting 15 pips a day. Let's just say trading half of your account. Okay, again, being disciplined, being disciplined. 15 pips a day with a $20,000 account, you can make $700 a day. Okay, 700 bucks a day. That's 15 pips. Done. 15 pip trade. You're done. You're out of there. Now let's just do the math. Let's just say you trade for 200 days out of the year. That's not even a full year. It's just 200 days out of the year, and you're making $700 every trade. Okay, you're going to have a end of the year balance, end of the year income of $140,000. I share that this Excel sheet in our group. It's for the members of the group. You can easily create such a thing. It's not hard. Um, but anyway, I mean, shoot. If you have a properly sized account and you have discipline, just to take 15 pips a day, guys, only trading 10,000 of that 20,000, uh, and you know how to trade it, guys. You can, and you're willing to take a $700 profit, even if it goes more. Okay, now you're trading 5 lots to do that. That's a lot of risk. Okay, but again, you got to know how to trade. And so what you do is you start very very small and you learn how to trade on a very tiny account, and you take your 15 pips, even if it's a $5, fine. You just keep adding to your account, adding to your account. That's the strategy. And if you can't do that, you can't do it with big money. So if you can't do it with small money, you can't do it with big money. So you start, and so this is designed to train you. I'm gonna go full time here pretty soon, but I've got what my own. I want to turn a 300. I want to turn $300 into $3,000 is what I would like to do. Okay, if I can do that, and when I do that, um, I'm going to go full time, and once I can pass that test, that means I'll be disciplined enough. I'm dealing right now with greed. I hold trades too long, and I lose profit that I had. And that's my problem consistently, and I've realized it and known it. And so what I'm doing is I'm training myself right now, and I'm having a hard time. Even I'm still having a hard time. There's something in my brain that just is not clicking, and the greed button is just I got to deal with it, and so that's the emotion I'm dealing with right now. Okay, let me show you one more price action. Uh, let's see. Let's see what you guys are saying here. I use Forex.com, Denny. Um, yeah, you need to learn to read the charts. You need to learn to understand. So yeah, you definitely TA is part of trading, but again, that's definitely true. But you can learn some simple strategies that I feel um, you know if you learn them and you control your emotions, fear, hope, and greed, um, then you'll do okay. All right, man, it's 10 o'clock. I had some strategies I want to share. Some just I'll teach you a couple of rules, but I feel like class is going long. Um, how are we doing? How are y'all doing? Do you have enough stamina for about 15 more minutes of teaching, or you want to call it a night and come back next week and just pick up where we left off, and I'll show you some real-time strategies and some rules with those. That'll be good. What do you want to do? Good, sure, yeah, go more. Okay, all right. Okay, let me explain to you. Let me show you something, and it'll make sense to you. It'll make sense. Look on the 15-minute chart. All right, this is Euro USD. Okay. Um, Let me see. Let me go to the 5-minute chart because it's easier to see it on the small candles. Okay, when you're dealing with the Asian session, and then London begins, the first move is almost never the real move. Okay. So in other words, a lot of times you're going to get entry cheese. Okay, right here, this is all Asian. This is all in the nighttime in Asian. This is leading into London right here. And what happens? Boom! Here's a big old candle to the downside. Okay, and so if you got this line drawn right here. By the way, if price is going up, you draw the line on the bottom. Okay, if price is going down, you draw the line on the top. Just so you're aware. Okay, line on the top. When the price is going down, when price is going up, line on the bottom when it breaks. That's just a trend line breakout strategy. Again, you got to be disciplined to take your profit at 10, 15, 20 pips, or cut the trade if it comes back to you break even. Okay, you got to be disciplined for that. Hey, Lammy J, what's up? Okay. Now that being said, look at the first move down. Okay, it's a breakout down, very quick. Okay, how many pips did it go? It went 10, 11 pips. Okay, and then what happened immediately? What happened immediately? Okay, it came back up. All right, and then it came back down, and then it shot up again. So that the first move right now wasn't the move. Okay, and that happened at, so when you see the first move breaking out of a consolidation, it's almost never the move. Okay, very, very rarely is that the actual move that's going to take place. Okay, see this move right here? We already talked about it. It broke out of that line. See this line right here I drew? It broke out of it, and then it came back on you. It's the second move. It's the second move. Okay, so a rule that we have is let it center before you enter. Okay, let it retest before you enter your trade. Okay, so for instance, when this came down, this came all the way back up. It came back too high. It wouldn't have taken that trade. Price came down. Okay, but look here. So as price went up, price came down, did not break the low. Okay, didn't break the low, and then we had a reversal candle. Okay, so this retest is where you want to enter. So as price is shooting up right here, you don't want to be entering the trade. And let me get a little bit bigger here so y'all can see. You don't. I mean, if you're going for a small little trade, you don't want to be entering the trade at the top of this candle. Okay, you don't want to be entering the trade up here. Wait for it. You say, well, it might run without me. It runs without you then. Okay, but you need, it rarely. I mean, listen, how many times does this happen? Very rarely. Okay, so you wait for it to come back. This is the best place to enter down here. You say, but price is going down, Jim. Yeah, but you enter long here. Here's your stop right there. Look how close that is. Just a couple of pips away. Boom, that's a great trade. What would you have gotten if you traded that and you entered long? You got in somewhere right here. Yeah, that's 30 pips. Boom, you got a 30 pip trade. Boom. And that's the kind of trade you're looking for, and then you do another one if you want to, but wait, wait for it. Let it center before you enter. So here, this one broke out. This thing broke out. Some traders are like, oh, I got to get in. It's going away from me, and look what happens. It comes back. Okay, but notice where it came back to, the center of the whole bar to the upside. So let it center before you enter. Okay, so let it come back. Once you see a reversal candle, that's your entry point. Let it go up. Okay, and then your stop is down here. It never stopped you out. It gave you, how many pips did it give you? Somewhere around there. I gave you 17 pips. You had to wait for it. It scared you, but it gave you about 17 pips. And you might not have gotten all 17, but unless you were just taking profit once you got 18, once you got 15 profit, 15 pips or whatever, you get your 15 pips, take your profit, you're good to go. Okay, so look here, you had kind of a reversal action here, right? And again, I'm just picking different places on the chart. You got some reversal action here. You say, okay, I got to get in this trade. It's going down, and then boom, look what does it does? This big candle comes back up. Let it come back to you first, and then show signs of reversing again. That's where you get in the trade. Stops up here, stops really close, and then how many pips would that have given you if you traded that? 20 pips. Again, 15, 20 pips. And so you're able to make 15 to 30 pips within this kind of environment if you're disciplined and you have rules that you follow. And so the rule here is if it breaks out on you, okay, it breaks out on you, wait for it to come back. Let me show you today's trade, okay? I was not as disciplined as I should have been. The first move is almost, so a rule you need to remember, the first move is almost never the move. Let it center before you enter. Okay, if it doesn't center, you don't there's no trade. Okay, so my trend line when all this was going on was right here. We had a break, we had a retest, but what didn't we get? We didn't get a closed candle that had a continuation pattern. Okay, so when there was no continuation pattern here, then I had really no entry. Okay, I should have waited for that, but it went up and up and up and up. So my new trend line is here. Okay. Once this thing rejected, came down, it retested and gave me another kind of an entry right here. Now there were a couple of stop hunts right in here, a couple of stops right in there, and it just went sideways for a little bit, and finally towards the evening hours it started to pay out. It started to pay out those pips. Okay, and so those pips were finally given to you. Now this one didn't pay out a lot of pips today. It doesn't always do that. End of the day trades, this one again gave you about 20 pips. If I got in a little lower, maybe like 15 pips. Got in a little lower. But that's another thing is let it center before you enter. So you're looking for anytime there's a reversal, you're looking for an engulfing candle. Okay, an engulfing candle that retests and doesn't break the low and then has continuation pattern. Let me just show you some places on the chart where you have engulfing candles on the 5-minute chart. You can use the 15-minute chart, but I like engulfing candles on the 5-minute chart because when you get an engulfer on 5 minutes, oh buddy, that's volatile. Like right here, look at that. Look at that beauty right there. If you were trading and you saw that candle right there, oh buddy, it's on like Donkey Kong. You wait for it to come back. And it started going up. Oh, there's your entry right in here. There's your entry. Boom. You would have gotten 50 pips out of that trade. That's a nice trade. Look at that. That's right at London. So this happened at London. Okay. That happened right at London. Had just a small retest. It didn't quite center, but there's your. And once you got that engulfer to the upside, buddy. Now right here, if you can see it. Right here, this second engulfer, it came back to you, retested structure. That would have probably been the best entry right there. You didn't really get entry here on this one. It didn't come back deep enough. It didn't come back as far as you think it should. And then it continued on. And so you're FOMOing. No, you wait for it to come back 50%. Let it center before you enter. Okay, let it center before you enter, and then once it centers on you, then you enter. Okay, and see a lot of time. I mean, how many pips did that thing come backwards to you? 9 pips. How'd you like to sit through 9 or 10? 9 or 10 pips. Thinking it's going against you. You don't like that, so let it come back. Wait for it. Don't resist the FOMO that gets you into a trade right here. Okay, question from Denny. Who is more greedy, the one who never had money and would like to be financially independent, or the one who had money and lost it all? Huh, man, revenge trading, trying to get it back. That's a real strong, um, a strong. There's 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 a strong desire to get a lot back at one time, and that's the greed emotion. So probably, I relate to that. I know that feeling. I know that emotion to want to get it back. Okay, I've given you some price action. There's more to say. There's so many. I've got so much more to teach, but that's next week. Got to come back next week. Okay. Hey guys, thanks for being with us tonight. Glad you guys came by for the live stream tonight. What do you think? Give me some feedback. What did you think? What was confusing? What was helpful to you? What do you think? You should practice paper trading this style. Again, you got to be disciplined. 15, 20, 10, anywhere from 10 to 30 pips in that range, and stay there. 10 to 30. It's all. It's all. 10 to 30. You're not in EU. You're not going to get a 100 pip trade tomorrow. You're not going to get this tomorrow or tonight, this morning. You're going to get something small and choppy. Okay. Depends on what time frame RSI is maxed out on. What time frame are you thinking? I mean, it's already coming out. We got hidden bull divergence right here on the 15-minute time frame. Hidden bullish, kinda. I mean, yes, there is technically hidden bullish divergence here, but a strong move to the downside would um, would negate that. So we got to be careful with the divergence. Divergence can be wiped out on any time frame. On the 1 hour chart, we're not quite maxed out. I mean, in fact, um, we've got bearish divergence here on the 1 hour, but anyway, RSI is inconclusive right now, really. Oh, 4 hour chart. Let's see here. 4 hour, not so. There's plenty of room for upside on the 4 hour. And but we do have. Well, if price comes past here, we won't have the divergence, but we have technically hidden bearish divergence right now, but that'll probably go away. It's too close. Hey, Snee, no problem. Glad it was helpful. Glad it was helpful. Mark, yeah, man, no problem. Thanks. I hope that was helpful to you. Cool, cool. It makes me happy. That makes me happy. I hope you guys learned something. Let others know about the channel, guys. I'd like to hit 3,000 subs. One of the ways I'm supporting my family and doing what I'm doing here is this YouTube and feeding the trading group. That's why I spend so much time in there with you guys. I want you to get I treat it like a full-time job, but eventually it's going to be full time. We're going to actually have a live trading room on Discord where I can talk to y'all and actually I'm taking this trade right now and here's why. Things like that. Okay? It won't be after the fact or you won't get late information. So, yeah, that's coming in the future. All right, y'all have a great night. Enjoyed it. Here, just as a bonus here, let me for everybody that hung out on this long, let me do some Bitcoin TA for you. Looks like what's it doing? Looks like it's going to the downside here. Now, is this a 1-2 to the upside? Are we going to get a little reversal here? Could get that. Hasn't broken that low yet. Or this could be a 1, and then that's a 2, and it's coming down here, and then it's going up. Or it could just continue on to the downside. So you'll notice, you see the trend line that I've drawn here? See it? Draw that trend line. You get a break of it? Guys, you get a break of that trend line, guys? Most likely coming down. Here, let me see something here. It's not a very good trend line. Let me get a good. Well, yeah, that's not a good trend line. That's not a trend line. Oh, that was a RSI line. Duh. Let's see here. Something simple for you to do. There's a key trend line. There's a key trend line right there. Those are some lines to have on your chart. See if price comes on back down to here. It's kind of confluent with this. It's pretty decent. So, um, so price action looking down, but again, that's just could be confusing traders. This looks like a three-wave move. Actually, this looks like a diagonal. 1, 2, 3, 4, 5. Looks like a diagonal. Three-wave move and then down again. Maybe. I don't know. It's hard to say. Elliott wave. Just have to wait and see. Gotta wait and see what we get. But I think overall we got to come down more. But whether we come up here first before down, I can't say. That's the big question mark. Do we get this and then down? Or is this all we got right here and then we're coming down again? So I can't say that. I'm not sure. Or are we done? And the final is we're done here and now we're 1, 2, and then we're heading up. Not sure. Not sure. All right. Yeah, I work and trade and run a group. Peter, all the information's on the Patreon page. Just click the link in the description. You'll find out the information. It's pretty simple. All right, you guys have a great night. Yeah, thanks for stopping by. You guys, I enjoyed being with you. So come again. We'll see you next week. I'll see you tomorrow in a video. All right, talk to you later.